Alrighty, we are live. Thank you all for tuning in. We're going to give it a few moments here to let people come in, but if you're just joining us, we're doing this on a few different platforms, so if you can see and hear me okay, just drop in a quick comment and let us know real quick. And we're going to give it a few more minutes here and let some more people join it before we get things kicked off. If you're watching on our website, there should be a little chat in the bottom to ask questions throughout the live stream. And then if you're asking, or if you're on other platforms, feel free to just drop a comment into the chat, and we'll get those coming through. But we're gonna get into all the updates with the SBA loans, PPP, EIDL loan, all sorts of stuff that just came out. We have a couple great guests, Will and Dan, who have been really diving into this stuff over the last couple months now since it started rolling out. And I'm excited for the conversation and excited to hear the updates on all the loans and everything. So before we jump into everything, I just want to give it a few more moments here to get people on board and make sure people are all coming onto the stream here. If this is your first live stream or you've never been to one of our events before, don't know who we are and what we do, my name is Michael. I'm the founder of Entre. We're a social network for entrepreneurs. We host a bunch of events. We just rolled out an app to connect entrepreneurs, help people find partners, investors, mentors, co-founders easier and faster. If you want access to that, or if you want to get in touch with us or whatever, just go to our website, joinentre.com. It'll just be a short thing there. You can just throw in your email and you'll get access to the app. We're kind of doing an onboarding process right now. So if you want early access, just check out our website. And I'm going to bring up Will and Dan, and they can give a quick intro on themselves, and then we'll jump into the presentation. Will, Dan, how are you guys?
Good, Mike. How are you? Hey, Dan.
How's it going, Will?
Good. Yeah. I'm super pumped for this. I'm glad that you guys are coming on here to give an update. I'm gonna move the banner. Well, no worries. So I'm gonna jump off. I'll let you guys introduce yourselves, and then we can get into the presentation here. Okay?
Sounds great.
Sure. Hi, everyone. Will Winter here. You've probably heard a couple of my other webinars I was fortunate enough to speak on through Entre. I've been a CPA for about 15 years. I have a Master of Accountancy Degree from George Washington University in DC. I ran my own practice for about 3 years now, and I've probably learned the most I've ever learned in the last 3 years. So, and that's probably why I'm here speaking to you all today on the PPP loan and the EIDL loan and the latest and greatest stuff that we want to know as business owners. What does it mean to us? Is there relief in sight? Can we breathe? Can we sleep at night now? Are you going to have help regarding filling out applications and all that? We are going to cover all of that. So that's in a nutshell my business, Winter Accounting Advising LLC. And we plan on being around for years to come.
Well, let's hope, and we don't think that's not a possibility, right?
No, not at all.
For everyone who doesn't know me, my name is Daniel Kane. I'm an attorney. I'm licensed in the state of New York and also a fellow colonial. I did my undergrad at George Washington University, and then also did my JD at Catholic University in DC. I've been a practicing attorney for a number of years, and before I went into private practice, I was actually an attorney for the Small Business Administration. So I have been dealing with a lot of questions about the PPP loan program, the EIDL Economic Injury Disaster Loan Program. And I'm looking forward to this discussion today because there's a lot happening right now. There's a lot that possibly could happen out down the road with this program, with both programs. So this is a very timely presentation. Will, do you want to kick it off?
Yeah, absolutely. Thanks, Dan. Well, everyone, this slide is probably familiar to a lot of you that are chiming in for the second, third, fourth time. I'm not going to go over everything here, but the first thing I wanted to do was just get the EIDL loan updates out of the way. So a lot of us back in the day, I guess March, April, we first heard about the economic injury disaster loan. We all ran to apply for it. And initially the government said they're going to give us all 10 grand advance, whether we get the loan or not. And it was going to hit our bank accounts in 3 days. Well, we all know how that turned out. We all got basically $1,000 per qualified employee that we had on our payroll. So that didn't quite work out the way they planned it. That fourth point down, the application process, we were anticipating 2 phases. The first phase being pre-approved, and the second phase taking a little longer with a couple of additional steps. Right, financial statements needed to be provided. Some had to be on SBA approved applications. The repayment term still is 30 years. Loan payments are still deferred until the end of 2020. I believe, Dan, correct me if I'm wrong, but now it's a year from the date you got the loan. Is that correct?
I believe so. There's a question whether or not it's 10 months or 12, but yes,
Yep.
It has been extended.
Yep. So now that it has been several months, hopefully some of us have gotten 1,000, 2,000, 3,000, all the way up to 10. We were then wondering, whatever happened with this loan? And within the last few weeks, a lot of business owners have gotten emails from the SBA saying, hey, we actually pre-approved your EIDL loan application. Click here to either create an account or to go to the next step, right? And you had to put in some information. It brought you to a screen, and then it popped up a magic number, what you were pre-approved for. And then you had to, follow a few extra prompts. And then they'd ask you, how much of this money do you want? So for example, if they said you were pre-approved for 50,000, and they then go on to ask you, how much would you like out of that 50,000? You select it, and I'm assuming a lot of you probably selected the max. And then it said, and then you officially applied for the loan, and then the pre-approval either went through to a loan approval or a denial. So for those of you that have gotten the loans approved, you got another email saying the loan was approved. But then it didn't give you any other clarification as to what happens next. Like I said just a couple seconds ago, it was our understanding that there was going to be some additional requests, financial statements, financial data, liabilities, et cetera, that needed to be provided. And that was anticipating taking a couple weeks, maybe months to get through their system as everything else is done since COVID-19 hit. It seems like the system has been pretty slow. So about a week later, a lot of business owners got the loan deposited right into their fund, right into their bank account. One thing we have to go over is how we use this loan. Just like the PPP loan that I'll talk about in a minute, there are stipulations as to how you can spend this loan and the proceeds of the loan, how you can spend it. And there's also other requirements too. Depending on the size of the loan, you may need to have an annual review done by a certified public accountant. And correct me if I'm wrong, Dan, but I believe it's 25,000 or more requires a review. Do you know that? 25,000 or more. So that means if you receive more than 25,000 through the EIDL program, you are required to hire a CPA at the end of each year, and you need to have a review of your financials done. That's going to determine, basically that review, the CPA that you hire is going to look at how you spent those funds. And I'm assuming there's going to be more guidance forthcoming to those CPAs that do review these financials due to the EIDL program. It's a 3.75% fixed interest rate. You have 10 months to 12 to pay start paying back the loan. And yet, believe it or not, it's 30 years. So you think about it, it's sort of like a mortgage, a low rate mortgage. It's a fixed rate, maximum term 30 years. So we just want to make sure that we're spending it on qualified business expenses, and what they're calling it a working capital loan. What does that mean? Well, Dan was kind enough to answer a few questions for us, but also out there, working capital in the accounting profession is known as anything that you need to run your business, essentially, from day-to-day operations. That could be rent, business expenses, employees, payroll, not to be confused with using the triple P loan proceeds or even the employee retention credit, because those three are going to overlap, and that's another issue I see forthcoming. Now, all this relief is, a lot of it can be used to help with payroll costs, but some you can't overlap them. So, there's probably going to be a hierarchy that we're going to develop to determine, all right, what do we use first for payroll, what next, and if there's anything left, maybe we can, use the third option.
Yeah, definitely right. I think a lot of businesses who are getting those triple P loans, for instance, they have to use that for at least 60% payroll. And if they're using that for payroll already, why would you use your economic injury disaster loan for payroll as well? So it's great to have an accountant or someone else helping you look for working capital and opportunities to spend down that money.
Yep, that's a good point. And what I'm seeing, there is a tendency for the EIDL loan to come through, and the EIDL loan is what I've experienced with my clients, and even others that have called me to ask for guidance. The EIDL loan proceeds have been generally more than what individual or businesses have gotten through the triple P program, and that applies mainly to small business. There's some heavy hitter businesses out there that have gotten a pretty big penny from the triple P program. So Dan is right. So, what we'll get into in a minute, the triple P, we'll talk about the new rules, way more flexible. A lot of you that are business owners that are listening are going to be able to walk away from this webinar if you haven't read about it already, and with a big sigh of relief. And be able to sleep better tonight knowing that you have a lot more time to, spend your triple P proceeds and have the loans forgiven if you follow the rules.
Hey guys, real quick, we had a question come through on our site, and I know, Dan, we actually talked briefly about this before as well. Bridget's asking about using the EIDL loan to pay off debts prior to COVID, right? So I know the language, it seems like in the loan itself is a little unclear exactly if you can use it for, it seems like you can't use it for long-term debt or like old debt, but I don't know if you've seen any updates on that, or if you can touch on that a little bit more so it's clear. Whether it's anything pre-COVID or just maybe debt that has occurred starting February, March. What do you think about that, or what have you heard recently from that?
So one of the things you have to worry about with an EIDL loan is what you're using it for, and Will has very articulately laid that out. What I've seen in my practice with my law firm, and then I've also advised some other law firms on how they can work through this. SBA has been reacting to COVID differently than it has to other disasters, and that's produced a lot of different rules. EIDL with COVID-19 seems to be slightly different than it is for other disasters, like a hurricane or a severe storm in the Midwest, where you would apply for an EIDL loan. You'd be able to use that loan to cover expenses going forward, but generally you don't use it for expenses previously, especially long-term debt. You want to use an EIDL loan in the COVID context for working capital. SBA representatives have said that this includes your accounts payable, and that could even be in the form of a credit card. It could be in the form of just debt that you're holding on to that you haven't necessarily repaid in the form of an invoice. That is something you can use this loan for. But I'd caution everyone to always keep apprised of how this is changing. Because if Triple P has shown us anything, it's that SBA is going to react to COVID. And they're going to try and build nuances in very quickly. And if someone has a question about whether or not they can use the funds from an EIDL loan or even the Triple P loan for a particular debt or a particular expense, call SBA. They have representatives that are educated on this for COVID specifically. And then if they don't give you a clear answer, ask for tier 2. And if you say you want to talk to someone from tier 2, you're talking to a loan officer. You're not talking just to a representative. So they often have greater information. As Will can tell you, and as I can tell you, it's sometimes difficult to get to tier 2 because representatives are supposed to be reluctant to send you up to their management. But I always tell my clients, I always advise businesses who are dealing with Triple P and EIDL, stick it out, always ask for tier 2 when you can. And if that's not helpful, always look for SBA SOP 5039. And what that is that's the standard operating procedures for SBA that governs disaster assistance, including economic injury disaster loans. It goes through everything you can use an EIDL loan for in normal context, and we haven't gotten any word from SBA to say that no longer governs. So
what was that one more time, Dan? I'm going to put it in the comments here.
So it is SBA SOP 5039.
5039. SBA SOP 5039.
Yep, SOP stands for standard operating procedure.
Gotcha. Okay.
And I believe that document's like 100 and some pages long, correct, Dan?
I use Control F a lot. I recommend people.
Cool.
That's just for individuals that maybe Google it and then hit it. It may not. Hopefully, if it's a PDF, it'll fly right to the page that it's on. But you may have to Control F it.
Yeah, it is a PDF, and you also can find all of the standard operating procedures, final rules on SBA's website. If there's anything they're good at, it's providing the documentation when a program's been around for a significant amount of time.
Okay, great. Bridget has a quick follow-up. Payroll work is considered working capital, right? So people can use like their payroll with their EIDL loan money, right?
Absolutely. Yeah. That's working capital. It's it's any expense that you would need to carry on your business with.
Yeah.
A good example to kind of expand on what Dan was saying. So you clearly cannot use the EIDL loan to pay off any personal credit cards. That is, I think we can all agree on that. You cannot use it to pay off your personal credit card. Now, a lot of business owners, small business owners or businesses out there, 100% shareholder of an S Corp, tend to sometimes use their business card for personal purchases, which it's not wrong to do. You can do that. However, there's just more accounting. That would be set up either as a distribution to you, compensation to you. So you just have to make sure you treat those things properly. If you are using a business credit card or a business line of credit to pay personal expenses. I mean, we've said this even before COVID-19 hit and the EIDL loan hit and the Triple P program hit, but more so than ever, we can't. Coming from a CPA, we always encourage individuals to kind of separate the personal expenses on a personal card and the business on the business side, because at the end of the day, you're just paying your CPA more money. We like to make a profit, right? But we want to spend it on more value-added services for you folks, and not with the tedious task of trying to determine what expenses are personal and business. So this is a good time to kind of revamp your budgeting, your bookkeeping, et cetera, and work with your CPA. And if you do have, I don't know if that answer has been addressed, but so for debts that have incurred before COVID-19, it's my understanding that you can use the EIDL loan to pay credit card debt on business expenses. You can pay that off with the EIDL loan proceeds.
That's my understanding as well. And I've talked to SBA representatives and confirmed that. So
okay. You just gotta make sure you separate the personal.
Yeah. When I talk about credit cards for a business, I'm talking about a business credit card. I'm not talking about your personal credit card.
Yeah.
Like Michael,
what is a gray area is sometimes when individuals start their own business and maybe they can't get a business credit card right away, right? And I'm sure you see where I'm going with it. So they have a personal credit card that they've always kept track of and they've never maxed out. Now they start a business, they buy a laptop, they travel, they eat, right? And now you have a personal credit card that you're using for business. So it's the other way. It's the opposite effect. Again, just keep good bookkeeping, you know, and I would encourage to keep receipts. There's plenty of apps out there you can get on your cell phone. You can snap a picture of your receipt, and then it basically sorts the receipt for you, categorizes it, and a lot of times these apps sync right up with QuickBooks Online, so it gets right into your income statement and balance sheet. But you have to be careful what you're spending these loans on, because like I said, if it's 25,000 or more, it's going to need to be reviewed. And don't feel like you can get by without a review, because they can pull the loan back on you. They can. It's my understanding is they can demand that the entire loan be paid back if the guidelines are not followed. Is that correct, Dan?
I'm not entirely sure if it can be pulled back, and I would have to get back to you on that. I trust your judgment because you're a CPA. You deal with it from that side.
They will give you a chance to kind of remediate the issue, but in extreme circumstance, you know, I'm not trying to instill fear on anyone, but at the same time, I would hate for you to have to give anything back that you've gotten for your business. Because if you spent it, you're not going to be able to pay it back, and you're going to get yourself into more trouble. So just use your funding wisely, folks. You know, this is a lifeline. Look at it as a lifeline for your business, right? And use it wisely, and we'll be okay.
Yeah, I would echo that. With all of these loans, it's really important to be extremely explicit where the funds are going, how they're being used. And using a CPA is a great way to ensure that. Will, I know you've talked about it a lot with your practice, but having a CPA who can point out, okay, this really isn't working capital for your business. This is probably more of a personal expense. Don't use it for that. There are going to be plenty of expenses for you to be able to use your EIDL loan or your PPP loan for, especially now that there's a much wider window for use.
Yeah.
So if you have a question about whether or not you can use something, contact someone. Contact an attorney, contact a CPA, or contact SBA. Get confirmation before you do it.
And for those businesses out there that created an S corp, right? And you know, they're one of those businesses out there. There's many that have said, oh, you know, I'm an S corp, you know, I'm making a profit. Now that I got, you know, my CPA keeps telling me I got to pay myself a salary, but I just keep holding off. Folks, if you got money from the EIDL program, that qualifies. That's working capital. It has to be a reasonable salary, arm's length. It has to be what someone else would make in your business if you had to hire that person outright. But you're allowed to pay yourself in that regard for a couple reasons. One, you're required to under the IRS rules, and two, you're going to be remitting payroll taxes to the IRS, which will also be covered under the EIDL use. So this is a golden opportunity to kind of also tax plan too. You know, if you start up and you get yourself into a salary position, you know, and your business is making money, you know, there may be an opportunity outside of the EIDL proceeds to start investing in a retirement plan. I'm kind of getting off topic a bit, but I'm just trying to tell you folks, if now may be the time to get compliant, use this EIDL loan to pay yourself a salary, because there are perks to doing that aside from just being able to spend the EIDL proceeds.
Okay, I have a couple more things here real quick, and then we might want to move on to PPP.
Sure.
Here.
Sure.
But a couple quick things for the EIDL loan. I just want to revamp because there's people that are just coming in right now too. You can use it to pay off business credit card debt. Just make sure you're very careful about not, you know, double dipping or using it to pay off any of your personal debt. For people who are just coming in.
Yep.
Another thing here, real quick. You cannot increase your salary or your dividend that you were previously taking. Is that true with the EIDL loan? And how are they doing that if you get money and now maybe you want to increase your salary or someone else's salary in the company? How does that work with EIDL loan?
Again, it has to be reasonable, right? And it has to be arm's length. So it's, like I said, if you were to say, you know, you'd rather hire someone to do what you do, how much would that person accept? right? And also too, bonuses are allowed, but they have to be part of your business plan. When everybody got their triple P loan proceeds initially, everybody was saying, well, I'll just pay myself a salary and the amount of the loan and be done with it. Well, it doesn't work like that. There's rules to that, especially if you're an owner in the business. There's like a formula you have to use, which is kind of a little quirky formula, but it's nonetheless it's law, so we have to follow it. So
I would agree. Definitely be cautious in giving yourself any pay raise or bonus with either EIDL or triple P, because SBA and Congress have thought about that. They've thought about people using these funds to just give themselves a large salary or to give themselves an increased bonus. Frankly, I would not advise my clients to give themselves an increased bonus or an increased salary, especially with these, given that SBA is already getting heat for the triple P loan program and says that it's going to be auditing. They could do that with EIDL. They could do that with others. And I think you set yourself up for a risky situation if you start increasing unreasonably.
Yeah, that's a good point, Dan. I think one example of where it could come into play is if, a business has been in business for, let's say, 10 years and annually the owner has taken maybe, it's in a contract where, maybe 2% or there's a formula involved and it's been common practice of the business. It could be construed as, okay, maybe that could happen. It can't just be all of a sudden, boom, I'm going to give myself a 50% bonus.
Right.
It can't be kind of unusual.
Okay.
So just talk to your CPA or attorney about it if you have any issues doing that. But I would definitely, that's one thing to keep in mind, or paying yourself a salary if you're required to, because the IRS will also eventually hit you with penalties and interest for not paying yourself a salary. So now's the chance as well.
Gotcha. Okay. We have another question here too from Rob. He received an EIDL loan as a sole proprietor, but he wants to create an S corp. Can he then transfer the money to that S corp, or since he got the money as a sole proprietor, he has to keep it underneath of that?
That's a very good question, and I'm going to let Dan take over on that.
I love it.
I would generally say it's not possible, because what you're doing there is you're modifying the loan. You're like any loan with a bank, entering into an agreement between yourself and the SBA for an EIDL loan. Especially with COVID, you can't then take that loan and give it to another business, at least without talking to SBA. There are ways to do loan modifications to give it to others or purchase a loan from another business, but I would not. I would generally say you can't just take it and put it with another business.
And I think to that question, I think if I understand it correctly, it's a sole proprietorship, a certain amount of liability. There's no liability protection. Now you're going to create an LLC. Now there's liability protection. That's an issue in itself right there, I think. Now, if you were, I don't know, a partnership transferring to an S corp, again, there may be some law involved there. Again, to Dan's point earlier, call the SBA. That's a great question for the SBA. I'm sure they could at least give you a good answer or maybe even help you convert that loan.
Yeah. I would actually also suggest that if this or any other individual is thinking about transferring their loan to another entity, whether they're converting from a sole proprietorship to an LLC or corporation or another corporate form, whether through a merger or acquisition, they need to talk to their loan officer. They need to talk to SBA, because again, that loan, that EIDL, or even the triple P is between SBA and the sole proprietorship, and you're now changing the parties. So no matter what, you really should talk to the SBA.
Yeah, and that's the case whether this is a COVID EIDL loan or not. I mean, that would apply if you just got a regular bank loan. That would still apply as well. Good question though. And I'm assuming that's going to help a lot of listeners out.
Yeah.
One last thing on the EIDL. So what I highly suggest everyone do is put the EIDL loan proceeds in a separate bank account, because this is, especially if you're getting more than $25,000, because this is going to make the review, if I'm anticipating my busy season being real busy next year with these reviews, it's going to help. It's going to knock down your CPA costs, believe it or not, because we're going to have to run some testing. And if all of those expenditures due to the EIDL loan proceeds are in one place, it's going to be a lot easier to track. And that's what we're going to have to do. We're going to have to track the money. So set up a different bank account for that. And for even the PPP, if you got PPP loan proceeds there, some banks have already put it in a separate account for you. If that's not in a separate account, I would try to get it in a separate account too, because then it's going to be able to show that you use those, you met the 60%, 60-40 rule, which we're going to talk about next.
Yeah, I also agree. Every business should be thinking about putting these in a separate account, because not even from the CPA side, from the legal side, for a PPP loan or an EIDL loan, if you have a review of any kind, if you apply for forgiveness for a PPP loan, you have an Sba audit because of the PPP loan, you want to be able to really succinctly and effectively show that you use those proceeds properly. And if you have all of your finances mixed in one account, and then you're trying to show that this one transaction went with this one credit card that went to this one thing for your business, SBA is going to find a weakness there and immediately ding you for forgiveness or even take out your entire loan. So definitely be careful, and it's always best to have a separate account.
Gotcha. All right. That's it for the questions right now on the EIDL loan. So you guys want to move on to PPP? I'm going to drop out here. That was an extended time period.
It's okay.
I'll leave it to you guys.
Real quick.
Yeah, that's okay. And also, if anyone has any questions on EIDL, they can always email me and Will at our email addresses, which are listed below the slides.
Yep. The Payment Protection Program. As of yesterday, the Paycheck Protection Flexibility Act of 2020 was passed by the House and the Senate, and it's on the President's desk to be signed. We're assuming that the President's going to sign it. I think I don't think it will not be signed. It's just a matter of when. Hopefully, in the coming days. Say that again.
He's gonna sign it.
Yeah. So basically, a lot of groups out there across the country got together and were concerned that they weren't going to be able to meet the requirements of the loan forgiveness that comes along with the PPP program. One in particular is the hospitality business groups around the country. So we have the hospitality groups to partly thank for this, I guess the speed in which this act did come about. It came about just in time because a lot of the 8-week period was just about up for a lot of businesses, and they were going to have to fill out this application. And I've gotten a slew of questions and concerns late at night, even on my text and phone. Hey, Will, I need to fill out this loan forgiveness program. Please help. And I said, and I actually was, I took a chance and told them, I'm pretty sure they're going to, extend the period, but call me tomorrow. So we'd walk through the process, and I would highly suggest, if you're trying to do it yourself, I would highly suggest getting your CPA involved, because it's kind of a Sunday news day puzzle, so to speak. You have to do some testing and you have to do some math. But what the PPFA is, the Paycheck Protection Flexibility Act of 2020, it extends the PPP loan forgiveness extension, and it also provides other friendly changes to business owners under the new rules. The first one is extends the covered period from 8 to 24 weeks or through the end of the year, whichever is earlier. So it all depends on if there's businesses out there that are still due to receive PPP loan proceeds. It will be deferred through the end of the year before the cover period for the loan forgiveness. So again, it's from 8 to 24 weeks. So it went from 2 months down to 6 months, or 12/31/20, whichever is earlier. Now, the initial law said 75% needed to be spent on payroll expenditures, qualified payroll expenditures, and no more than 25% can be spent on certain other expenses, which was mortgage interest, which you can't pay in advance. You can't prepay the mortgage interest, utilities, rent. Now that went down to 40%. So now you can spend up to 40% on non-payroll related expenses that focus on mortgage interest, utilities, and rent. And only 60% needs to be spent on payroll related expenses. So between the 24-week period and the 60% requirement on payroll, I think a lot of businesses are going to find it's a lot easier to get this loan forgiven. Again, you're still going to need to keep good records and still check in with your CPA and or attorney from time to time if need be, because just like the 8-week period, the 24-week period is going to come and go real quick. To have this loan forgiven, it's going to be a big benefit for a lot of businesses out there.
I completely agree with that, and I would actually just specify for people, these changes apply to every loan that's already out there. So if you already have a PPP loan, we've provided with this slide that Will put together the information for applying for a loan, because you still can apply for a PPP loan. The funding is not run out. They have not said they're going to end the program before the end of the year. So if you haven't gotten a PPP loan yet and you want to apply, find your SBA lender, find a local lender, get an application in, get the funding as quickly as you can. But these changes, the 24-week period, the 60-40 rule that they've implemented, and then the employee exemptions, each of these apply to PPP loans that are already out there. So don't think this doesn't apply to you because you've already gotten your PPP loan. A lot of these already apply, and in fact, you need to weigh some of these. For instance, Will mentioned the covered period is now 24 weeks. If you find that the 8-week period is more beneficial to your business, you can elect to still use the 8-week period when you apply for forgiveness. The 60-40 rule, that's not a steadfast rule. If you want to spend more than 60% on payroll, you can. You can spend up to 100% on payroll. It's just for those businesses that have other expenses like rent, mortgage interest, and utilities, they can use up to 40% of their PPP loan and still get forgiveness for that loan. Michael, do you have a question?
Yeah, so we have a question here from Rob. Within that 40% that you're talking about, he's asking about health insurance. Can he use some of that to cover health insurance, or should that just be something that the EIDL loan should take care of? And then people, real quick, that like if they haven't applied for a PPP and maybe they don't necessarily have employees, but they have contractors right now, should they apply? Or is it like if you don't have a payroll or you're taking a loss, you shouldn't even apply for the PPP?
Well, I think there's two questions there.
Yeah, sorry, that was a lot.
That's okay. The second, and Will can disagree with me, the answer is almost always yes. Apply for a PPP loan because it's government funding that is forgivable. And if you do it right, you're getting an infusion of cash from the federal government. If you don't do it properly, it's just a loan with a very low interest rate that you just have to pay back. Will, I don't know what you've seen in your practice, but I've seen very few instances where applying for the PPP loan itself is a bad move.
Yeah, right. So I to this day, I still tell everyone, if they haven't already, apply for it. The banks are generally real good at telling you what you need. They're going to ask for the information. They've been scripted really well and trained really well to roll out this program. So they're going to ask you for certain things. And to Mike's point, if there's a loss, if you're a sole proprietor or a single member LLC, and you don't file a separate business return and you have no employees and you have a business loss, I mean, you can apply, but you're not going to get anything. Because what they're going to take is they're going to take your net income on your Schedule C that you would have filed with your 1040. And if there's a loss, there's no funds to receive there. Mike, if you want to restate the first question, I had a good answer, but I lost it.
Sure.
No,
Yeah, it was the 40% used towards healthcare, right?
Oh, right.
So there's additional things that they can use it for. Could they use the PPP in that new like 40%? Could they use that on healthcare?
You will have to check back with me on that. I will say though.
Health insurance.
Yep, I got you. So I believe there's a rule where health insurance for owners don't apply, but don't quote me on that. All right, my email's down below. Email me, but I believe there's special rules for owners of a business.
Yeah, I would similarly caution anyone trying to claim health insurance or healthcare costs as part of their forgiveness application, because that's what that 40% is for. Like, if you're not going to apply for forgiveness, the 60-40 rule doesn't really apply to you. You do have some restrictions on what you use the funds for, but you don't have to use 40% for healthcare costs unless you're applying for forgiveness. And I actually, I apologize for looking away, but I was looking at the loan forgiveness application to see if it's stated anywhere. And the only things that are listed as part of non-payroll costs on the forgiveness application, which unfortunately is some of the very scant information we have about the forgiveness process, you can do covered mortgage obligations, rent obligations, and utility payments. Healthcare costs are not included in that. So absent another regulation or additional guidance that you can look to include healthcare costs in those non-payroll, you probably can't. And if you as a business need to include that in there, email 7aquestions@sba.gov, ask for clarification. And then as soon as you get clarification, act on it.
Yeah, and if you have bona fide employees that you're paying payroll to, I believe their health insurance would apply to the 60%. However, there's special rules to, I believe, the owner health insurance does not apply. But again, if you want to shout me an email with the number to call you, I'd be happy to get on the phone and we can walk through it and I can have an answer for you. Because like Dan said, you don't want to, eat up the costs and find out they're not eligible. I will say, and then we'll move on, make sure that at least 60% of the loan is used for payroll costs by the end of the 24-week period. Because if it's not, the loan will not be forgiven. So you have to use at least 60% of those proceeds for payroll-related costs, or the loan will not be forgiven.
Okay. Real quick, we had a question come in from another Dan here. He jumped in late, but he's asking real quick to clarify the EIDL loan. No business can apply for that now anymore. And he read that only agricultural businesses could still apply. Is that correct?
Dan, I appreciate your name and your question, because that's a big problem right now. There are challenges currently to how SBA is handling the EIDL loan program, because they haven't changed the disaster declaration saying that you can apply for an EIDL loan as a small business in the disaster area until December of 2020. They, on their website, they've closed the portal, which is just a moniker for the electronic version of the application. But they haven't said that they're not accepting applications by regulation. They haven't changed those disaster declarations. So you're right that the website says they're only accepting agricultural business applications right now. I would caution you to just keep track of that, because that might change. There might be a challenge. They might open it up immediately for other applications.
Okay, great.
Good question.
Yep. And then to briefly, we'll do a quick run through of I'm trying to write down some of the key points too. We'll do a quick run through at the end, but PPP is still open, so please apply. You encourage almost pretty much everyone to apply just to see what happens, right? And I'll let you guys continue on, and then we'll go through a quick run through right at the end and get to some more questions too.
Yep.
Yeah. Also, Will, just before you go, I did look at other portions of the loan forgiveness application, and they do mention employee healthcare costs as part of payroll, which, from my understanding, is in line with the regulations they put out. So you are correct on that.
Thank you. We make an all-star team.
Yeah.
Yeah. So what's interesting is, you know, I have a couple clients, and there's probably a lot of businesses listening as well, that the 75% rule is going to be no issue. I'm going to easily, within 2 months, I'm going to spend at least 75% on payroll. Not an issue at all. I've heard it, and that's great. And for those instances, the old rule was there was another federal payroll tax deferral due to COVID-19, where employers can defer certain payroll taxes until the end of 2021 and 2022. You pay 50% at the end of next year, and then 50% at the end of 2022. Now, if you got the PPP loan proceeds, you couldn't do that. You couldn't defer those taxes. Now, under this new Flexibility Act, you can. So if you have excess payroll costs, right, you might want to talk to your CPA, because there's a chance that you can defer certain taxes and not have to pay them until a year and a half from now, 50% of them, and then another 50% a year after that. So, like I said earlier, you know, between the PPP program, between the EIDL program, and between even the employee retention credit that we're not even talking about today, and then the payroll tax deferral, they're all going to get intertwined together, but there is a strategy involved where we can hopefully kind of get the best of both worlds, and that's why you need to basically talk to a CPA. Whether it be me or anyone that you know, a family member that's a CPA, any CPA out there, I would highly encourage a CPA and not an enrolled agent. Enrolled agents are great, but when it comes to planning, you do want someone that is certified. It kind of gives you a little more assurance. Now, Dan, do you want to talk on my last point here on the extension for rehiring?
Sorry, have you changed the slide? Because the slide that's up right now has payment terms.
Yeah, well, yeah, this is the employee retention credit. You know, nothing's changed regarding that. We're actually, believe it or not, I might as well mention this real quick. So the employee retention credit, we're going to see a lot more businesses take advantage of this in the second quarter, because at the end of the first quarter, on the 941, that businesses need to file for their employer for their payroll taxes. There was an addendum to the first page of the form saying that you know, it's been delayed to the second quarter. So at the end of June, beginning of July, a lot more businesses, if they went this route and got this credit, they're going to be able to take advantage of it then. So there's still more planning involved. And this is if you have payroll.
Okay, so if you want, I'll talk about the employee piece of loan forgiveness. So
Please do.
So thank you, Will, again, for highlighting how the PPP loan process is going, and a lot of those changes with PFA. I think every business, whether they're applying or they've already received a PPP loan, need to pay attention to those. With loan forgiveness, you're now entering a totally different phase. And I caution everyone to think of it as a different phase, because there's different requirements, different pitfalls, and different opportunities for businesses. One of those things is when you apply for loan forgiveness, you are claiming a certain amount of money on your PPP loan was used for certain proceeds to an extent and is forgivable under the CARES Act or subsequent bills. Part of that includes a reduction. So if you apply for $100,000 in loan forgiveness for a PPP loan, they currently reduce that loan forgiveness amount based on any deficiencies in the number of employees that you had at the end of your covered period compared to when you first started the covered period and even before the disaster. And then also any reductions in salary, any deficiencies in salary, wages, benefits, you will get dinged and get another reduction in loan forgiveness. Further, the PFA actually added an exemption to some of those reductions. If you cure either the number of employee or the salary deficiencies in your PPP loan and your use as a business, you then get full forgiveness. You don't get any reductions. The PFA adds another exemption to those reductions, where if you make an offer to rehire employees and use your PPP loans for that, and your employees say no, or they're unavailable, or you you offer it and you don't get any acceptance of your offer, you're not going to get reduced. The PFA also adds if you can't hire anyone similar to those employees. If you try to rehire and then can't get them to accept, and so then you go to another person, you try and hire them with the same skills, and they won't accept, whether because of unemployment benefits or another reason, you as a business are not going to get dinged for that too. And this is a great benefit for businesses because it ensures that you're going to get more forgiveness. Because it's going to be very easy, especially in the hospitality business, to be in an instance where you can't hire anyone because you're not open, per CDC, per HHS regulations and guidance. So that's a huge boom. Some of the risk in applying for a loan forgiveness, is that you're opening yourself up to review by SBA. And SBA, as everyone knows, has been hit hard by Congress and public opinion for how the PPP loan program has been implemented, how it's been run. And the stories of Shake Shack and the Lakers and big businesses getting these loans has not helped. So as part of the loan forgiveness process, they can review your initial application and see if you were eligible. They can review how you used your proceeds. And by doing so, SBA is ensuring that one, the right people got the loans, and two, they used it for the right thing. And if they find that you did not deserve a loan or that you did not use it for the right things, you're immediately going to lose forgiveness, and then you're also possibly going to have to repay the loan quickly. And both of those instances are horrible for businesses, whether they're big or small. Similarly, if a business had gotten a PPP loan and they did it for especially over $2 million, you may or likely will get hit with an SBA audit sometime in the next 6 years. And that audit is going to review your application, review how you use the proceeds, whether or not your certifications were in order. And those certifications can be the size certification, could be affiliation. Most importantly, it could be the economic need piece, which I'm sure everyone knows about, whether or not you have other sources of liquidity, other sources of cash, credit, etc., that don't make a PPP loan necessary. SBA has been very nondescript with what that means. A lot of SBA reps have been kind enough to say that this is a very factual thing, so businesses should be holding on to state order declarations saying stay at home, any declarations preventing them from opening or operating in their documents with a PPP loan, because they'll eventually get hit with this audit. Last, I would also say, if you apply for loan forgiveness or you apply for a loan generally, or even you get hit with an SBA audit and the finding is not favorable to you, whether or not you got denied for your application, you got denied for forgiveness, or SBA reviewed your application and said, nope, you really shouldn't have gotten this, or you used it improperly, there are procedures for you to appeal that decision within SBA. And we're hoping that we'll see regulations on how the loan forgiveness appeal process will work. But always remember that it's not the final decision. If Will got denied for PPP loan forgiveness because they said he's not a small business, I would be the first one to challenge that, because Will is a small CPA firm. I am a small law firm. If they said I wasn't small, I would immediately challenge that. And there are procedures listed on SBA's website, in their regulations, and in the statute that say how to go about that. And if that happens, don't be forlorn, because it's a good argument, especially with economic need, that you do need this loan, or that you are small. It's just if you're on the line, you really need a professional to help get you underneath that line to maintain your size. Will, does that all make sense? Did I bungle anything?
No, that definitely makes sense, and it just to give everyone an example. So I think there was a case not too long ago, right? Didn't a couple guys over in Jersey or Rhode Island, didn't they try to scam the system? And they got they almost got a couple $1 million, and they created all these fake payroll returns, and they got nabbed by the FBI. So they're definitely coming down hard.
Yeah.
You know, even for legit businesses that have that amount of money, you know, it's you know, you think about it as, you know, if someone were to win the lotto, they say, you know, it's life. It's not all it's not all it's supposed to be, right? You get $2 million, right? Even at a big company, there's sometimes there's opportunities to kind of, oh wait, well we can pay this off, we'll pay that off. You have to be very careful, you know, because you know that's a lot of money that they're giving to you in such a short amount of time. So you know, you definitely want to, just like if you were a small business, these big businesses that are getting these $2 million loans, still segregate those funds and just draw from that one account qualified expenses. It'll make everything a lot easier.
Yeah, I would definitely. I would also say SBA and federal government's well-intentioned. They want to help businesses, especially right now. But think about it this way: they have a finite amount of money that they're trying to give out to help the smallest of small businesses during this time. They've now found out that there are big businesses that are taking advantage of the program. They are going to go tooth and nail to figure out who those people are and try and take away that loan. And you don't want to be on the wrong side of that just because you didn't file your application properly, you didn't keep accurate records, you didn't keep proper documentation of what the circumstances were behind your loan. And if you also think about forgiveness, federal government isn't going to be able to forgive everyone's loan to the maximum amount. The entire government would go bankrupt. But SBA wants to make sure that you're eligible for the amount of forgiveness you get because of that. So don't think of it as them trying to attack your loan. Think of it as they want to be prudent in how they're giving out forgiveness. And with that, they're going to try and attack you on size. They're going to look at your affiliations to see if they can kick out your loan that way. They're going to look at whether or not there was an economic need because you have $2 million in cash sitting in a bank account that you could have covered 6 months of payroll with. All of those factors are going to come into whether or not you get forgiveness and whether or not they immediately cancel your loan. So just be careful.
I think small businesses and startups definitely were fortunate enough. Initially, that rule was going to apply to everybody, correct? Or anyone that got over 20,000, or
Which rule?
I think it was everyone, where you can get everyone was going to get audited.
So that's a great point. Businesses, any business can get audited. SBA retained the right through its regulations to audit any loan, whether that's because someone alleges that the loan shouldn't have gone to that person, whether or not SBA gets information from the loan forgiveness application or another source, your website, Twitter, whatever. They can audit your loan. It's loans over $2 million in the PPP loan program. The audit's automatic. They're going to audit your loan. Also, with being over $2 million, you don't get the benefit of SBA saying that we deemed your certification in good faith.
That's safe harbor.
That's safe harbor. Safe harbor is if you returned the loan, but they've said that if your loan was below $2 million, we're not going to review economic need and your sources of liquidity. Basically, your credit worthiness. However, if you're above $2 million, you're going to get audited and you're going to have to prove that you needed this loan. And that's where
you have to go to great lengths to prove it.
And you want to turn to a professional that can help you do that, whether it's a CPA showing your accurate books or a lawyer who can make those arguments for you. I would advise anyone to contact someone to help them with that, because that's going to be a very gray and very methodical process.
Absolutely.
All right, guys. I think that's pretty much. I don't want to take up much more of your time. I know you guys are super busy right now with all this going on. I'm sure you have a lot of clients to work with, but
we're right on schedule, it looks like.
Yeah, if people are out there, right, you have there's a lot of questions, right, and everyone's business is different. So, I mean, I know you guys mentioned, reach out to your CPA or a lawyer, and I encourage people to reach out to you guys. Obviously, we worked with both of you guys, from with Entra and whatnot, and I know you guys are really following this stuff and going to do what's best for everyone, every entrepreneur, everyone's business, and everything. So their emails are below: Will at wintercpas.com and Dan at kanesquire.com. So do you guys have any closing remarks? Where can people follow you, find you, and then we'll wrap up?
Yep, no, just, email me if you have any questions, and I'll leave on this note. They're talking about a second round of stimulus. So, we're not sure, kind of, I think it's 1,200 per, they're throwing around some numbers, but we're going to get a second round of stimulus. We're not sure when that's going to be. So if you did get the first round, odds are you're going to qualify for the second round, although they may crunch down the income limit a little more. So stay tuned for that. It's not over yet.
Yeah, same thing with me. People can find me at Daniel T. Kane on Twitter. They can also find stuff on my website. I try and put out articles as I can on these unique issues. For instance, Dan's question about the EIDL loans and agricultural businesses. There might be, wink, wink, an article coming out on that. But I don't want to sound too doom and gloom. The businesses that have EIDL and PPP may get audited. You might have a loan forgiveness application review. You're going to be fine in most cases. It's just be careful, be methodical, make sure there's documentation. And Will, you did a great job highlighting something that's coming out. I would tell everyone, keep an eye out for the Restart program. There's been a lot of movement on the Hill regarding PPP and EIDL, whether it's a hearing or a bill, but a couple senators in a bipartisan fashion have proposed this new loan program called Restart that is similar to PPP, but has some additional restrictions on who can get it and who can get forgiveness. Hasn't been passed by the House. It might be, but it's not something that's been passed yet. Keep your eyes peeled because there could be a whole new program to worry about.
And hopefully you'll hear it first here, right on Entra at a future webinar.
All right, with that, I guess we turn it back to Michael.
Yeah.
Unless he already left.
Yeah, maybe he already left. All right, well, I'm going to sign off. Thanks, Dan. You did a great job. Thanks, everyone, for listening.
Hey.
Until next time.
Take care.
See ya.